Hello and a warm welcome to your update from First Capital Bank. I can't believe we're almost 3/4 of the way through the year, so it seems timely for us to give you an update on the progress and what's been happening at the bank this year. Equally, we've just announced our half-year results for 2022, and more will be said about that from our Finance Director, Fanuel Kapanji, in a few minutes. We've made solid progress as we've moved from 21 into 22, delivering sustainable growth through the first half of the year. This is despite many macro headwinds, such as the Russian-Ukraine conflict, global inflation and local inflation, a depreciating currency, and in addition to that, a tightening monetary policy. With all of that, working in partnership with you and our colleagues, we've still managed to deliver growth in the first half of this year, which is a huge achievement. We've also partnered with many organisations, principally the European Investment Bank, to bring in €12.5 million line of credit, which will be used to invest in the productive sector, and you should be able to draw down on that facility over the next couple of months. Additionally, we've worked to develop our brand and worked on many partnerships, delivering many LinkedIn webinars where we've touched on important topics that are important locally, where we've debated and hopefully brought you some critical insights. We've also, as part of our community commitment, delivered on our partnership with Zimbabwe Farmers Union, Junior Achievement Zimbabwe, where we've mentored many youths. We've also sponsored the Zimbabwe Junior Open this year, continuing to develop and highlight our importance and our focus on youth. So it's been an incredibly busy first 9 months this year, and as we start to move towards the fourth quarter, it's important that we continue to work in partnership with you, our customers and clients, with our colleagues and staff members who have delivered tirelessly this year. So that concludes the business update from me. And now to get into some of the numbers with our money man, the Finance Director, Fanuel Kapanji.
Hello once again. I'm going to be talking to you about the financial performance of the bank for the 6 months up to the 30th of June 2022. And I think before I go into the numbers, it is important that I just share with you a bit about the operating environment that we found ourselves having to deal with. So inflation on an annualized basis up to the 31st of June closed at 191%, 191.6% compared to 60.7% at December 2021. And during that 6-month period, we also saw rapid depreciation of the Zimbabwean dollar, which on the official market depreciated by some 237%. And it is also important to notice that during that same period, we actually had sustained liquidity challenges during the period, which arose as regulators were implementing policies to try and stem the rapid rise in inflation. But that notwithstanding, the bank was able to post some impressive results during that period. We saw growth in underlying business with our deposits increasing by 14% to close at 40.8 billion. This is a real increase in the 6-month period. Loans also increased by 37% to close at 21.4 billion, with about 68% of that business being underwritten in foreign currency. So there's actually been quite a shift in the complexion of the balance sheet, so to speak. But whilst that happened, we also maintained a very good quality of our assets portfolio with a non-performing loans ratio of 1.7% being posted at the end of the period, which is very well within our appetite from a strategic point of view. Looking at the income outturn, we posted income growth at 57% compared to 2021, earning 10.4 billion for the 6-month period. And that increase is arising out of growth in the underlying business itself, where we've seen net interest income increasing in real terms by 12%, whilst fees and commissions also increased by 18%. And of course, given the macro dynamics that I mentioned earlier on, we also saw gains from the revaluation of the FX position contributing quite significantly, having expanded during the period by 290% compared to the outturn in 2021. Our operating expenses, of course, responded to the macro environment, increasing by 34% on a year-on-year basis. But what is interesting is to recognize the fact that we actually achieved an improvement in our cost efficiency ratios, with cost-to-income ratio improving from 68% in 2021 to 58% in 2022. Now, the profit in inflation-adjusted terms posted by the bank was at 472 million for the period, which is slightly down from a figure of 483 million inflation-adjusted for 2021. And of course, when you then look at the total comprehensive income for the period, we would have posted 5.3 billion compared to 754 million, and that speaks to the revaluation of certain assets we have on portfolio, which are maintained for purposes of preserving value in the business. In historical terms, of course, the profit was 7.3 billion against 722 million in 2021, and at a total comprehensive income level, that would be 16.4 billion in 2021 compared to 969 million in 2021. So on the basis of this good performance, we felt it necessary to provide a return to our shareholders, and we declared a dividend which is going to be paid in the third quarter of 2022. On a product scale, we've actually broadened our offering, and notably in the MTA space, we now have 3 MTA partners that we're working with. That is RIA, Hello Paisa, and Western Union. And customers, they've actually enjoyed this service, and the feedback we get is that this is an area that is likely to be growing as we go forward. On the digital side of our operations, as you are aware, we've actually been driving a very aggressive digital drive, and recently we launched an enhanced mobile application which has been doing very, very well on the market. We've also recently launched our new enhanced internet banking platform. I think in terms of the conversation around financial performance, products, and the strategy going forward, that's probably what I would like to share at this point. Thank you very much.
So before I wrap up, I'd like to really thank both you, our customers. We realise you have a choice as where you bank, and we really appreciate your partnership and the partnership and trust that we're building as we go through this journey together. To our staff, thank you for your tireless efforts. Despite the macro conditions and the hardships that we face, you've continued to remain focused on our customers and delivering superior quality performance. So we thank you very much for that. As we go into the final quarter of the year, we need to make sure we continue to work together in partnership and continue to focus and achieve our goals together for the 2022. So thank you for believing us. Remember, belief comes first.